Well, good morning, good morning, good morning. Hope everyone had a great weekend. Good news, bad news. The bottom line commodity report is 9/10 done. I just had to review a few things. The bottom line has not been posted for a few months, mainly due to the me taking over the trading room, but most importantly because of being hit by a car. It's been kind of an interesting concept in life, but we are back on track, feeling better. Week 8 will be Thursday for those interested. Week 8 after my torn rotator cuff surgery. So physical therapy will be ramped up, and I'm really hoping to get back into the real world here, so to speak, of being able to do things. So we were out in Las Vegas, and a lot of folks, the only complaint that I have is I wish the room was a little bigger, and I think that was the complaint of some folks that came in and couldn't find a chair. So we apologize for that, but we will have a lot of people that had taken other popular educational courses were struggling. One gentleman told me he'd been trading futures, and he only came because he knew me from Thinkorswim. He's seen me spoke at many conferences before. He doesn't think he needs a lot of advice because he's been trading in the markets for over 30 years. But he's had the worst year he's ever had, and he just cannot get a grips of this market. I'm only giving you guys feedback from what I was told. People that in confidence were telling me of how they struggled, what this year's done for them, and I just present it to my room. I think that we've had, while we have not had a lot of knock the ball out of the park calls, we've had some pretty decent calls in the market, but I don't think it has been a fairly struggling event since the beginning of the year. I think we've done okay. I guess you guys are my judge and jury, and you have to find out for yourselves if what we teach and how we translate, and that's the key. I mean, I could come up with trade strategies all day long, but if it's not translatable, if it's not teachable, then it's not applicable to everyone. So the reason we put TTU together was, for one, to be able, in my concept of mind, to believe that it was teachable, that I could share people. It's just a matter of being, having the discipline, the personality type to follow through with it. So what we do here and how that relates to planning and scanning is real simple. We try to review what's going on in the markets based on our methodologies and our teachings, and try not to deviate from that. So with that said, I would like to review the markets, because now it is June and we have a new month and we have new things coming out. So I think it's starting from the top, working to the bottom, real simple. We always start with a daily positive thought, and I think if a person's going down the road of self-destruction, he or she does not need motivation to speed things up. What they need is a good slap in the head and reevaluate and re-educate themselves. Those are the two processes that will turn things around. That was by actually this motivational speaker, Jim Rohn. I think it's awesome because it really does apply not to, I think this guy was a self-motivational speaker as far as sales is concerned. And basically I try to look for phrases that are in essence applicable to our trading and how we can turn things around. So I think if you think that if you are doing the same thing over and over again, expecting different results, I think what we need to do is you need to stop. You need to communicate that you're struggling. You need to communicate that things aren't going right for you. So we can give you a slap on the head and then reevaluate and re-educate yourself and go through the process of what's going on. If you're anticipating signals, if you're guessing in the market, and it's okay to have a good sense of, I guess, intuition. But if you are going to have intuition on a market, like, for example, you think the market can't go any lower, it can't go any higher, or by a specific time period it'll turn around, use an option strategy that you know what defined risk is, that you're getting into the process with a defined risk rather than getting into a process of unknown ending. And what I mean by that is if you get into a futures and you sell the high and you think it can't go any higher and it goes higher, and then you get into another future, well, what's your risk? What's your exit strategy? You don't know, right? You just keep adding on to the position, and eventually, either the money runs dry or the margin department calls you, or, you just say, forget this. And so I don't know if I'm tapping into a sore subject with anybody, but I think the key is, you know, you can always use a strategy that has defined risk if you're going to break the rules. And, you know, if you are, number one, I think it solves the problem of having that desire of trying to outguess the market. You're in an option strategy. It defines your risk, but then get your hard-earned equity back to focus. You know, trading in the futures and trading in outlying products that like a stock, an outright stock position, guys, if it's not going well for you and you're you know, it's immediate loss, and it's with leverage, it's exponential loss. So I hope that maybe had been a good message to go forward for this morning and this week, and start the month of June off, quite frankly. My market thoughts and observations. Every single stock index closed higher on the week. The ES formed a breakout of a 2-week doji star formation on new highs in both the AD and on-balance volume. It suggests newer highs to come. Are they maintainable? With the volume and the AD line, yes. And how much higher? I think that 33 to 38 in that zone, 35 to be more specific, might give us a little upside. And then the first test of support back to 08, the first test of 08 will probably be a good upside. Last week I was asked, hey, are you going to up your targets? And my comment was, I got to see how the market closes, not just on a weekly basis, but on a monthly basis. And so we have. My new upside targets are at 1938. That's weekly pivot point. 1948 is monthly pivot point. Listen to me. Pivot point. And then the next major target of resistance, if this thing really wanted to, you know, shake the foundation of every bear alive, would be 1978. And what a fine year that was. Same story in the Dow. Positive close with newer highs in the AD and on-balance volume. The NASDAQ had the highest weekly close yet, but it failed to close above the March high. The AD line made newer highs, as did OBV. This is all weekly basis. The NICE closed on new highs for the year, as did the AD line, confirming it, but not on balance volume. So I guess you could say, if you want to look for some negativity, you'd say the on balance volume the volume did not confirm the rally yet in the NICE. The Russell generated a new PPS buy signal on a positive uptick in AD and OBV. It would need a weekly close above 1157.5, which would trigger a last conditional change breakout, which will project newer highs in that index. So possibly we get like a little sector rotation. People feel like they should get back into growth stocks, which is the Russell. The McClellan oscillator on both daily and weekly time frames suggests more upside. And that McClellan oscillator can be found on our Genesis page under RS analysis, relative strength, and spreads, which I'll share in just a second with you. And it's taking a chance because apparently I was told in checking with Genesis, I've just got too much. Not many people do what we've done here and put so much information out. This is on these Genesis, so it is a little taxing and trying on their servers apparently. Weekly, as you can see, we are at, with the McClellan oscillator, we're not anywhere overbought, we're not anywhere oversold. And when we take a look at even the daily, you'll note that, you know, we're not at a major resistance of an overbought area or an oversold level on the McClellan oscillator. So there's probably room for this market to move up. Looking at my NQQ spread, you know, I've always said that as this thing points higher, you know, we've had a couple scary points, but as this thing has, since the beginning of the year, the trend is up, and it's still up, and it defines the fact that the market should maintain positive momentum. So it gets to the point where you get overbought and the market pulls back. And so a newer high or a fail of a newer high, which is something that we're actually entertaining right now. So that's why I think that the first test, which would be 35 to 38 in the S&Ps for this early week, today, tomorrow, the first test of that resistance is worth taking a secondary shot at the upside. Last week I had pegged 1920 for the upside, which worked until about the final minutes going into the close yesterday. In fact, I think that We need to focus on social media and tech names within the the MSH sector, and stocks to watch in that sector include Amazon, Apple, Facebook, Google. MSI is Motorola Solutions, IBM, believe it or not, Aruba Networks, and Playtronics, I believe that PLT is. Excuse me. And I think last week's comments were fairly priceless. The squeeze is on, and this could be the move that takes the ES to the 1920 level, and the NASDAQ to that 3% move we've expected, as noted in the prior week's email. Only the ES is broken out to new yearly highs, but the breakout needs to be respected as AD lines and OBV support this move. Typically, this is one of the few times of the year that bond and stock prices move in tandem, at least for a seasonal trend. And we did see that. And I want to bring back up bonds in just a few minutes. For the month of June, our June seasonal trends actually strong. We still have seasonal strong trend in the bond prices towards month's end. To the mid. That's why it says mid. Middle of the month of June is when we start to see peaks, the market peak out. So maybe it's, comes a little bit early. So you want to be aware of that. That's why I'm going to be focusing on the knob spread specifically, and bond prices, looking for a potential PPS sell signal in there. All right. The yen, the British pound are seasonally strong. Copper is, like I said, someone asked me about copper. 2 people asked me about copper. And I said I'm neutral on copper because it's in a seasonally strong period of time, but it won't go anywhere, and it does not remain. It actually ends a seasonally strong period of time in mid-June, and then it weakens. So copper prices, look for the middle of the month of June for copper prices to weaken. That's why I've got mid right there, all right? Wheat. Wheat actually starts a seasonally strong period, but late in June, and cocoa remains seasonally strong. Weak, natural gas, RXH, healthcare that is, XBD, broker-dealers, DBA, agriculture, IYT, transportation, which has been on fire. Transportation has been leading the way. Transportation, as we take a look at our relative strength analysis, and I'm not talking since the beginning of the month. This is since May. If we just take a monthly review, the transportation sector, IYT, is up over 5%. It doesn't show the color coordination here, but if I go to edit real quick, you'll see the IYT is red, and it's that one right about there. Next is the SOX, which should be the purple, as in the Barney, and then we have black, which is just the S&P, just to get a census of what the S&P has done. I believe black was S&P. Let me double check. That's 2%. Well, I must have changed it. Let's see. XCI, excuse me, telecoms. So the telecoms, and then we have materials. And so what are we looking at as far as a seasonal turnaround in the market? First off, I think if we are looking for a market that's going to turn in mid-month, so for example, if you start looking at seasonal weakness, if the IYT is one of the strongest, now XLU's in this case, and this is the XLU, this little pink thing, so it's actually recovered from mid-month. It was down 4.5%. Now it's only down 1.5%. So utilities are gathering a little bit of strength in here, but so I don't know what they'll end up doing. Are they going to end up being even 1%, 2% higher? I don't know. But towards the middle of June, XLU also starts a turnaround. Semiconductors, which has been strong, as I've shown, the Barney dinosaur purple color, up 5%. It actually is susceptible to corrections in the month of June. Gold and silver, of course, still are in a weakened state. Soybeans begin a weakened state, hogs and coffee as well. Coffee's been in a weakened state, and we've made mention of coffee and gave trade setups, and I think we've had students that actually took the coffee trades and profited from it, so good for them. Weekly signals, high closed dojis, Akamai Technologies. And let me go over and take a look at these with you. So, Akamai Technologies, we had a weekly buy signal Now, this is a doji right here, 1, 2, 3. So it did close above that doji right there. Typically, our rule is for the highest high when you get into 2 doji formations, which this also is considered a doji. So the computer was just picking up the high close doji, but the fact that it's still seasonally strong and the fact that the on-balance volume broke up suggests that Akamai on any breaks will be supported. So it's got this little triangle, it's got this little basing action. Price hasn't really broken out very far, but volume did. So it shows accumulation in Akamai. I will say that one of our students, Andy Wyant, who several times have mentioned about, sorry, Andy, that was ADP, excuse me. But this is air products and chemicals, and we consistently have students that point out, hey guys, you gotta buy Signal as singly strong to help out the community, and that's neat stuff. With Jim Thompson talked about GoGo, an online which I used on American Airlines yesterday, flying back from Vegas, by the way. So a lot of people use it as they can watch their own movies, because if you're ever on a long flight, you get a movie, and if you're not, you know, a lot of people back in coach are definitely using the internet and using streaming formats for their movies, so they are using internet. And GoGo is as people begin to fly in the summer vacations, GoGo, which had a nice move last week, might have more traction. So just point that out. Thanks to Jim Thompson for that one. Next, and I'm just here to validate that it is being used, and the flight was extremely full, both going and coming. What was MGM like? We have. I like MGM from a stock perspective. I will let you know. Aria, the tables were packed. Slots weren't. You know, the majority of people make money on the slots. Most casinos make more money on the slots. Slots were not the slots area, not all that packed or used. But the restaurants and the entertainment segment of Aria, incredible. Sage, I mean, every restaurant was just booked. I mean, just incredible at Aria. So looking at, we actually had dinner over at MGM on Saturday night at the new, it's kind of like a semi-private nightclub entertainment restaurant complex called Hakkasan. Hakkasan is at MGM Grand. And I'm here to tell you, it's just really, really formal. We ate at the little Chinese restaurant thing, and I mean, weird stuff, like they put caviar on little strips of duck skin, crunchy duck skin, right, with strips of cucumber and, you know, fancy pants, stuff like that. I wasn't a big fan. I like caviar, but I didn't like caviar on the crunchy duck skin. Weird stuff. It's a 5-star Michelin rated restaurant. The place was packed. Like, and the bill was insane. It's Chinese food. At the end of the day, it was just fancy Chinese food, and I think for 6 people, the bill was, I don't know if you guys would believe me, no one really ordered a bottle of wine or anything. Couple bill, I had some drinks, I had my typical club soda. I'm here to tell you, the bill was close to $1,000 for 6 people. It was crazy. I don't know, let me reiterate that, $1,000 for 6 people. I mean, it was crazy, and it was packed. So are people getting, are the players getting comp? No, there were a lot of people in there, young kids. I don't know where they get their money. It was insane. So I'm just here to share with you, if you've been over to Vegas, if you saw the young girls and the young kids and the young boys and the young everyone seems young, I'm getting old. But they were just crazy going into this nightclub. Crazy packed. So MGM Grand is doing something, and they did have a packed house. So I'm here to let you know that. So MGM, they have a lot of good things planned going forward. I didn't get any insights into what those plans are, but I was told, believe me, there's a lot of good things. And the person that told me that's the VP of the marketing over there, who we've become friends with. So in any event, thought I'd pass that on to everyone. A lot of good things planned as far as events and things of that nature. So in any event, I just wanted to share, I'm just sharing my experience with you from the event we did Thursday night to of course, the stay there, and then even down on the flight, which all transpires to just my observations and how it relates to trading. All right, so in the ES for this week, first test of any breakdown of 0805. Now this is a weekly outlook because this is the weekly planning and scanning. Pullbacks 0508 level look to be a buyer on the first test. And again, I'm looking to be a seller if the S&Ps get up to 1935, 19.8. As far as day trades, we'll take it as the trade setups occur. We've got resistance today for the intraday basis up there around 27 or so. And we'll be watching the Russell for confirmation of breakout. And as well, we'll be looking at the daily transitional change in bonds coming, okay? Bonds have a potential M-top formation. I'll get to that in just a minute. Euro currency. We have the euro with a ECB meeting on Thursday. PLT. So let's start talking about these stocks because we got running out of time for a lot of stuff to talk about as we start a new monthly planning and scanning as well as a weekly planning and scanning. All right, so this is Plantronics. It is in a period of seasonal strength. On balance volume really helps support this little up move. I would say that Plantronics, PLT, under your sheets, look for a possible pullback, 44.20, somewhere, you know, right in this zone, right in there, which would probably be 44.20, you know, 2023. I can't get it. There it is. More or less, you'd see that daily moving average popping. You'd see against that high right there, that opening range right there. This level, if you do get a 1 or 2 day pullback, should be impressive. Looking at the weekly chart here, this is the weekly chart. Looking at a daily chart, I mean, you would need a pullback. You know, Plantronic does have a habit of making quick spike lower lows, and then it zings back up. The fact that I think that the daily on-balance volume wasn't as strong as weekly suggests that we could get that pullback. So watch PLT down there. It is in the segment of the sector that I think is the strongest, as we pointed out. Next, let's look at AMZN. I think Amazon has been in everyone's ugly list. Amazon had a down day. The on-balance volume is not confirming the move, but we're just entering in a seasonally strong period of time. We did generate a weekly buy on good, strong weekly on-balance volume. So that shows accumulation in Amazon. So if you can get any time in the next week or so a pullback, and I think a pullback, since the market has this little ability to make higher lows. If we can, you know, apart from last week's narrow range day, but we might be able to get this market in Amazon a possible pullback near the 295, 297, something like that. On a monthly basis, you know, you haven't turned the market. You have long shadows. So if the market is going to be good sometime this month, remember, you don't want to take out the low, which is 284. You want to continuously see if the market is going to turn around. As you can tell, on a monthly basis, a seasonally strong period of time, higher lows. So Amazon has a shot of, you know, at least coming back. At the least, you have a shot of coming back into this level, and as we end the year, possibly, you know, into the new highs for the year. So that's Amazon. Next, Google. Google L, though, okay? Google L. I don't know if we're going to see this level stopped right on a dime and has proceeded to see a breakout, but we had the narrow range on Google, so I think Google might have a shot at a pullback back into against these highs. The midpoint of that breakout candle also would intersect just still above the moving averages. So Google 545 to 553 somewhere, and that's why I have a zone there for Google for you guys to watch and set up trade alerts. Next is IBM. Yes, IBM, the stock that won't seem to turn from a technical perspective, but as you can tell on a daily basis, it did make a little high close doji, but I think on a weekly basis, the fact that it made lower moves, with on-balance volume, it enters a seasonally strong period of time, but I'm interested in IBM, and I'm looking for IBM as a pullback, possibly back down into this level. So while I am looking to be a buyer of IBM, it's the 78 to 74 level, and I think that is one that has been disconnected with the overall market. We see the overall market up, and we see IBM down, and we could see a continuation lower. And for a longer term perspective, when we take a look at our monthly charts, we made the first lower closing low in a month, so we might see some follow through downside, but I'm a buyer at this area this month, 78 to 74. I know that's not something to get into right now, but these are what we have to look for. Next, STX. Again, Seagate Technology. This actually trend consolidation. This thing looks like it is actually getting ready for a major upside move. This is the daily chart. I don't suspect we're going to look for a big pullback. But if we do have a shot of some type of a reversal this week, a little profit taking after a move higher, or we don't see a move, this is one that I believe is a good candidate for if you can find a credit put spreads. If you get a pullback near 52, the longer term analysis will support this stock. The longer term analysis, meaning that in the month, as you can clearly see, we are against a strong support with shadows, shadows, shadows supporting the move. So back down to 52, you know your downside risk is breaks below this 47.5 area. All right, next. We have, at the end of this week, we have, and this is the stock ADP, Automatic Data Processing, that Andy was pointing out to us that we had high closed dojis, and it definitely had followed through to the upside. So as more people gain employment, ADP, obviously data processing, software data processing is important, and from a weekly perspective as well, this is the weekly chart, it looks like, believe it or not, it's getting ready to break out to newer highs. I like this kind of pattern. It did break out of a little descending resistance line. It broke out, it pulled back, tested the resistance line, and has made aggressive move higher. The only thing that's failed to move is with the volume, and that's why I suggest in this market we could see a pullback near in ADP. That's a typo. It's not 52, and I'll change that. I'm looking for the pullback to get back into around the 78 area. So just change that on the sheets and I'll update it. It is 78. All right, next, CAT, Caterpillar. We made mention that Caterpillar is, and Deere, if you check your sheets, that it enters a seasonally weak period of time, and it came right on cue, and now we have a PPS sell signal. Look for bounces and any rally near 105 area, and I'd be looking for credit call spreads. Also, John Deere. But I like Caterpillar because Caterpillar and John Deere also, you know, you might want to see a rally to test the resistance of this midpoint of that benchmark or that engulfing pattern right there, the midpoint there, which would come to around 92 and change, 90, let's call it 92.75, 89. You know, any rally up in there, if it happens this week, you get follow through. That's a good one for a credit call spread as we are in a seasonally weak period of time. Volume action suggests lower pricing, and even with the last couple day rally, you know, not tremendous volume. Next is Simon Property Group, REIT. I'm also, you know, here's one that just, you want to talk about can't conform to the overall market. If you're going to look for stocks to short, look for ones that are weak, look for ones that have the ugliest patterns, look for the ones that are in a seasonally weak period of time, and these are the ones that I've given you. So with that said, again, if the overall market rallies and they get a sense that this market can maybe come back and fill the gap, the midpoint of this breakdown candle right there, sell rallies near 172, 170 to 172, fills kind of the gap up in here, the midpoint of the gap, right up in there, that 170, 172 region, and that will be, I think, a great credit call spread. You'd want to do July, since you want to take a little bit of theta, since June is not going to give you enough time on that. All right, so that would be what we put together for you guys for this week's planning and scanning. We have reports out for this morning, PMI 9:45, ISM 10 a.m., construction spending 10 a.m., important numbers. In the EU, if we're a global economy, you want to make sure that tomorrow morning you pay attention at 5 a.m. The EU has unemployment report out. Also, the EU has the GDP and the producer price index at 5 a.m. And those are leading reports going up to not only the EU retail sales, but they lead up to what might be discussed in the ECB announcement at 7:45 a.m. on Thursday. All right. So big reports here in the U.S. and as far as earnings season is wound down. Quicksilver. Some interesting names here. Not much, but these are our earnings for the week. And that concludes our review of our weekly planning and scanning sheets. So with that said, I want to have everyone a solid good month and, of course, a solid good week. And we'll begin by starting off with hopefully a good day today. So with that said, do make sure that you change your sheets on that. And I want to extend everyone a welcome and thank you for being here this morning. And I hope that you found this information, again, helpful and give us targets of what to look for in the week ahead. And so with that said, let me go and switch over here to trading room. And one market that I wanted to go over was the bonds. At the end of the day today, we will be presenting ourselves a situation where we have almost a daily low close doji in the market in the bonds. Not a daily low close doji. What did I say? I'm sorry, a PPS sell signal. Here's the daily chart. In fact, it should trigger, I believe, a tick lower perhaps. So this was not really considered. This is 1814, 4 ticks, not a doji. But one thing I want to make mention is that if we do get a last conditional change, which will be updated for tomorrow, a close below this breakout candle, it just negates that whole breakout to the upside. That low happens to be 137.10. Close under 137.10. You know, we may not have to wait for the seasonal trend to turn for the bond market, by the way, which is on the sheets. So 137.10. An interesting point on the chart because it is the last conditional change. So I think this particular week, 35.38, these were my weekly objectives. I'm not sure if we're going to even remotely try to get up there. As you can see, the 5-minute has this little low close doji. We finally gotten on the opening range. If this does break down, a lot of people, we've got some students here, we're in some VIX position, and I said wait at least for the middle of this week for for that kind of turn, and you should see hopefully a turn. Now, I don't know if we're going to go up to 135, 138 straight away, or if we're going to see just a test of 08 first. But I would suggest any major in the SPOOs, if you get a big rock to the downside in this market first, just remember 08, somewhere around in here. It might, 08 could have been a little bit overzealous in my analysis, but looking at this level, you got weekly moving averages way down here. You've got last week's low, which is 97. So if the market wants to still maintain the bullish uptrend, could it come down and hold between 19 and 08 or 05, something like that? Sure, absolutely. It still makes a higher low, but we have a lot of room to fill between moving average and price. There's a huge gap in there. So that's why I say the first test down in here, looking at these highs, I just suggest that in the week ahead, the moving averages, they move. So this to me is where the appropriate pullback might be, and for anyone that is in, on and again, with a VIX index, you're looking for an increase in volatility, which comes with a descent in price. We've seen markets descend in price and the VIX not move. But I just think that if we do get a fast, furious pullback here, it'll give you a chance to breathe a little easier on that position, especially if it's for July expiration. All right? And that should do it for us for our planning and scanning for Monday, June 2nd. That concludes our planning and scanning for Monday, June 2nd. So